Welcome everyone to the Kendall Report. It is Wednesday night, hard to believe, half of the week's over. A little downside pressure today, but we're still trading kind of in that range. We dipped down. It was interesting. While I was getting ready for the show, we had a 20 handle sell-off, and the only thing I could find is the new guy, what is his name, Takata, I'm not sure if I'm pronouncing the name right, from Japan, was making some comments, and the market's dropped. They've since started their rebound a bit. We're back at ES back at 39. We traded down to 32, almost printing down to S3, which was 39.25. What I'm going to do tonight is what I threatened last night. I'm going to go through long-term perspective here, and we're going to spend a fair amount of time focusing in on the S&P, and we'll go through some aspects on the NASDAQ as well. And of course, we talked a bit about the Russell last night. Sorry to say, still very bullish. The database on the intermediate will have to drop below 42% to get me to think any differently. And I still believe we're in this massive sideways trading range. And I believe we're very close to bottoming here, in this 200-day moving average that's hanging around on the S&P may be of interest to you eventually. Talk a couple of things. We saw ISM manufacturing come out yesterday down at 47.7. That was actually a little better. Everybody was talking about rate hikes and worried about interest rates. The 10-year traded up to 4%. It was like the end of the world, but not really. They can't seem to really get a lot of push on the market. We continue to see it. There were 3 really good trades. Those of you that were in the live room, you should have caught at least 2, maybe all 3 of those trades. There were swings from bottom, 20, 25 handles, back down 20 handles, back up. It was amazing trading today. Of course, just because we weren't in the live room today, there was all kinds of opportunities, but very good day from if you're an intraday swing trader for sure. algos were pretty spot on, especially the 5-minute and the hourly. And you'll see what the hourlies, when I go through the technicals here in just a few minutes, you'll see what's set up there. So, but I do believe that these longer term charts will come into play as we come into, to the end of this first quarter. This will be an interesting month, and I'm still looking at positive numbers. S&P up over 3%, NASDAQ and Russell up 8%. And, if you read the news, you think the world was collapsing. And, I had a interesting conversation. I know he watches often, a good friend of mine in Switzerland last night. We were talking about midnight my time, early morning his time last night, and we were going through all of the things that are likely to happen going forward from the standpoint of growth in the economies across the world. I mean, there's a lot to go on here, folks. The world's not coming to an end, and there's a lot of things, and especially both of us old guys. We were talking about how interest rates, and I'll go into maybe a little bit of a rant here and I'll cover this more as we get into the interest rates, but interest rates are not high right now, folks. I guess this is an interesting time. Actually, if you look back, most everybody, somebody that's in the markets, I've been doing this for 20 years. 20 years isn't enough. You can read about all the stats back into the 70s. My mentors came out of the late 60s, 70s. I started in 79. And so they had been through that crush job and all the stagflation and all that stuff. That's when I came in the market. And then I grew up in the markets during the 80s. And, we had high interest rates well above 7-8% all the way, pretty much all the way through the 80s. Economies ran fine. Everything worked fine. No major collapses. We had our economic booms. Money deposited in banks should be rewarded. And what I'm trying to get to here is, if you've been in the markets for 20 years and you think that how it's been working for the last, especially since the GFC, if you think that's how it's going to work, you're going to be a little surprised going forward, because things are going to change quite a bit, and there's going to have to be, the money needs to be structured differently, and it works fine at 5, 6, 7%. That's not even high rates. Those were low rates. I remember I started in the real estate business in 1975. I got ran out by high rates in 1979. That's when Volcker came, and that's when I went to Chicago to be on the Chicago Board of Trade back in 1979. And what I'm trying to set up here for you is the rates and the structures that we're seeing now. Everything's going to change. I'm going to keep harping on this theme that I've been talking about. This is another sea change. And, as far as, I was talking to a good institutional client today, and we were talking, he goes, well, the impending recession. I'm like, no, I don't think so. So I just want everybody, when you go out in the world, especially those of us in the U.S. here, you go out, every restaurant, every, corporate restaurant is full. Go out on Friday night, try to find places. The malls are full, everything's full, nothing's slowing down. And all you hear out there is how these rates are going to absolutely crush everything. And I went through a little bit of a pitch the other day on just talking about commercial real estate. Commercial real estate's in big time trouble. You would not want to be in that business. If you are in that business, you know what I'm talking about. My brother's in that business, and he said there are no deals. The only guys doing any kind of trades, whether it's multifamily or any kind of commercial trades, are people that have 1031 exchanges they have to do. There are things they have to do. There's nobody doing anything because they want to do anything right now. And that will change with time, even as interest rates start to kind of come in, and cap rates and all the different things that affect real estate will start to change. And we did see mortgage apps down again today. They're still soft, but I think we're very close on the real estate, on the residential. We're getting close to a bottom, at least at where things will start to stabilize. And there's a little bit of an uptick going on, depending on where you look at. But my point is, if all you've been around for 20 years and you think the markets work like they have since the dot-com situation, then you're going to be surprised, because the Fed's been bailing the markets out one after another. And in the past, you had hawks like Paul Volcker. Greenspan was a reasonable hawk. Then we got introduced to Helicopter Ben, who was going to save the world. And of course, he told us they were going to get the balance sheet back under $1 trillion. We know what a joke that is. And I even have argued, I think on this channel and other places where I've been speaking around the internet, is that there's a different level of the balance sheet that needs to be done. The actual GDP output has continued to grow. So what you need to have on the balance sheet on the Fed has changed as well. So I'm going to stick with this story, because these are stories that take time to evolve. And when things feel like they do right now is usually where we start to get some turning points. And I'm going to preface everything I said. You'll see when I go through the long-term analysis here in just a minute, is I'm not super bullish. I'm not, I don't think there's all-time new highs coming. I think there's a lot of work to do. And I think there's probably all the way through this year, it's just going to be a really, really choppy year. The bias will be slightly to the upside, at least into Q3, maybe the first month or two of Q3. And then maybe there's some different scenarios to play out there. And we'll have to see how everything plays out. So I don't like to get too far ahead, but I will talk about tonight. We're going to go through long-term. We're going to bring up the S&P quarterly chart and a bunch of those things. So that is that's kind of the focus of tonight's stream. So hopefully you'll be able to get on that. Just looking at my notes to see if there's anything else out there that's good. Yeah, one of the things that happened yesterday, if you noticed, I kind of got on a rant last night on the Russell. Russell was the only market that was up today. The mid cap was also up. It was up 0.08, but S&P was down 0.47, NASDAQ down 0.66, and we're still seeing some downside in these markets right now overnight. But like I said, we're coming into this bottoming phase, and I still think somewhere around this 3,900 level. Go through all the details in a minute. I mentioned potential for a 3850 on the S&P. So let's go ahead and take a look at the Wavetech database, talk about that for a few minutes, and then we'll get into the technicals and get into this long-term view. Okay, so here we are, 32.43. We're down just basically as flat from where we were yesterday. We had 386 buy signals, 379 sells. Database is rotating here, and this is potentially a very healthy sign from the standpoint of the database. I've been talking about this 22% bullish. That number, anything below that, we get in. That signals a full liquidation mode, and that means the markets are going substantially lower. So these metrics will be really important over the next several days to see how they hold together. Reasonably impressive. Like I said, S&P was down 0.47, NASDAQ down 0.66. So these pretty moderate declines on a daily basis, nothing really big. I think last week, we saw a little more downward pressure as we finished the month of February, but as we come into March, as I talked about last night, March tends to have an upward bias, as does April. I like how the positioning of the database is right now in the intermediate. Tomorrow night, I'll go through the intermediate expectations. But as we look at just purely looking at these numbers here, we're seeing at least the rotation. So typically you get liquidation. This database, 6 weeks ago? 7 weeks ago was 80% bullish. That was the peak. And then we started to see that attrition. We watched it come down in the 60 handle. Then we got to 40. It couldn't hold the magic 42. Here we are at 32. And this is the lowest it's been since that peak. So like I said, these metrics will be really important for the next couple of days. They'll tell us a little bit more about the internals and what's going on with the markets on a short-term basis. On the intermediate term basis, I'm not going to go through that. I will tomorrow night, but we're still very solid looking forward for the next 150 plus days with a upward bias. And when you get away, as I've said so many times, you get away from just looking at the world through an index, and you start looking at it at a broader base viewpoint like this, there's a lot to be harvested from this database that tells you much more in depth about the breadth and the trends that are going on in the markets. Okay, folks, so we'll start with the very short term here, just to set up for tomorrow. We are seeing the algos are suggesting that the hourly chart is going to move up again in toward, as we come into, right into London, hour, plus or minus an hour around London open tonight. We should kind of improve. We should stay below, however, the 10-period moving average. That's 39.55. It's dropping right now 2 handles per hour, so that's going to be around 39.50. And as I've been talking about, we've been stuck in this 39.50, 40.50 trading range. Pretty much, if we go across this whole chart, going back to the 23rd of February. This chart goes back to the 22nd. It's an hourly graph, and we just hit fib target 1 on the downside, and the algos are turning up. So this is probably going to be about it. We're looking at 39.40, 350 was fib target 1. We printed down, as I mentioned, we went below it, almost went to fib target 2 at 25. And it's interesting when I show you the market grid numbers, it's interesting because 39.25 is S3, and that also is Fibonacci projection. It always amazes me in all of these techniques and tools that I put together, how they all align themselves. And I always use on intraday trading 1 minute, 5 minute, and hourly. I don't use 15 or 30, just the hourly. And then I go hourly, daily, weekly, monthly, and then quarterly on the S&P. And we're gonna start and do a bottom-up viewpoint of how the world's set up, and then we'll get into at the end of this discussion, we'll get into the end of the viewpoint from a longer-term basis. So take a look at the daily. We're trading just right on the 200-day 39.40. Last trade here, 39.40, 150, hanging around that number. It looks like the algos are charting. They're still negative, so this downward slope here on the 10-period moving average is still down pretty good. So we're going to stay under the 10. That's 4,004. If you look at where we traded just the last 3 sessions, the high was 4,003. Yesterday's high was 91. But if we go back 2 days ago, that's where we printed that 24 number. But 03, we've been getting rejected right around 4,000 here on the upside. So the game has been markets rally early, sell off late. We've been seeing the weaker closes every day. And I suspect we're pretty close to flipping that script and start to look at where maybe the markets are going to start low and finish a little higher or in the mid-range, something like that. And that'll be key. And as I said, I mentioned that there's some potential for a 38.50 number, but let's just go right up the scale here. But before I do that, let me just get the market grid numbers up here, and just so you can see that. And let me get the ESs up here. So here's the numbers. 39.21 was S3. I said 25, but that's very close to that fib target 2 on the hourly. 39.33 is S2. The low so far has been 32, so I was going off memory. So we printed basically an S2. R1 is 67. We printed R1, S2 already, and we haven't even gotten to the U.S. session. So I would suspect that we might see somewhat of a rebound as we come in get into R1, maybe R2. I don't see us, the RXT for today is 4,002, and we're not likely to see that. That kind of brings us into that 10 period moving average on the hourly. So I'm just looking for this thing to stay, maybe improve. We're pretty much extreme. 21 would be a big print if we got down to that level. I said 32 is low, so we basically have done S2, R1 so far. I would look for maybe a move back toward the 67 level. Just a really quick point here. When you get through these numbers, S2 being, we printed S2, S1 will actually be a resistance point. So 45, and then the next level 67. And I don't know that we can get enough to get this thing to move above the R1 level. It just depends. There really isn't any significant news of any sort coming out. I didn't mention it, but you got claims and continuing claims coming out, and there's Q4 productivity. That's really all that's coming out. So I don't really see that there's anything there for us to really hang on to and say this could do it. I think really the only thing that's likely to do it is we're just getting fairly extreme. There's been too many days on the downside and trying to push these lows, and they don't push very good. They keep bouncing out of these low 39 handle numbers. This is the lowest we've been for the last several days, so we're probably pretty close to the low in this pattern. And as I said, STX is all the way down at 39.10 for today, so that would be an extreme if we got down there. And it kind of maps out to some of the numbers that we saw going back. You have to kind of go back all the way back into, back into the pattern quite a bit to find these levels. So let's go back to TradingView, and let's go up the scale here. We're going to go weekly and take a look at that. If you recall, and I'm going to go weekly, monthly, and then quarterly, and we'll talk more using the quarterly chart what the longer term viewpoint looks like. So if we look at the algos here, they're really starting to stabilize a little bit, but it's interesting because PPM1 is still positive, plus 0.18, and PPM2 is plus 0.34, and we're trading right around that 21 period moving average. It's 39.51, 40.12 is the 10. So I think as I talked about, we're probably at the extreme here. There is a fib target, and this is what I mentioned last night on the weekly, that suggests that we could come down. Fib target is as low as 38.17, and I believe when we go to monthly, there's some monthly numbers around 39.50. So there is some potential on the downside. It looks to me that most of the algos are suggesting that we're going to see some improvement. If you look at down at the bottom here and PPM3, it's actually looks to turn up next week, and it's negative, but it suggests that we're going to see the 40 period moving average turn up. The 40 period's right at 39.46. This is right where we've been hovering around. So this is definitely a critical point. And if you're looking at the markets from a pattern viewpoint, we're trying to do stair stepping up. It's kind of a very overlapping corrective phase type thing. We don't have any impulse waves. And this is why I think that really what we're doing is just chopping around it in this big range that I talked about. We can go back to really September of last year and October lows, and we're still kind of chopping in that high-low range, a little bit above and below. So I see this as a major consolidation phase. And when you start to look out and you get away from the day-to-day things that are going on. So let's go over to monthly, and I'm still sticking with the futures. When I go to the quarterly, I will go to the cash markets at that time. So we look at the monthly. This is some of the numbers I was talking about. We've got on a monthly, S1 is 39 even. So we printed 32. that would be a pretty good hit. We also have the, let me get the numbers here. We also have the 40-month moving average at 38.50. There's where the 38.50 number I was talking about. So 38.50 is, there is probability there, and PPM 3 is up at a 0.52. So if we were to see 38.50, that would be the bargain for March to be looking to buy down there if we get down there. You know, we're really in this nowhere's land on the short term where we're just trying to search out and find the bottom. It won't take much to spook. There's a lot of folks short, folks. It won't take much to trigger a stampede to the upside. I'm not sure what that news is. There's really nothing coming out tomorrow. I don't really see from a news standpoint what that would be. We'll see what unfolds over the next couple of days. But yeah, I just saw a comment. I'm not talking about 38.50 this week. This is a monthly chart for this month. Okay, we're now talking monthly. So if you recall last month, I've called myself out multiple times because 4208 was, there was a number. If we go to last month right here, we look at 4208 was the high. Well, the 21 period moving average was 4111, and it was still negative. So we still have overhead resistance here. This is monthly. I have overhead resistance, and I talked about this. The range to expect for the month of March, the extreme is probably going to be somewhere around that 38.50, and on the upside, you're probably looking at R2 or so. R2 is 41.33, 40.50 is R1. So we basically have been, S1, R1 would be 3,900 back to 40.50 again. I think we probably try to print up to R2 at some stage around 41.33. And there's so much that we have to come out here yet. And I think one of the things that will be interesting that will drive this will be how the 10-year acts. And I'll cover that here in detail here in a few minutes. So let's get into the long term here. This is SPX, and this chart here, I'm just zooming out. This chart here is a chart that goes back actually to 1872. Okay, so we're going to come back into this section here. It's interesting because the angle of attack here on the 21, the extreme on the 21 period moving averages, 34.57. I don't think we can get there. We look at S1 here on the market grid for the quarterly. We've got this month of April is it. Let me just see if I can pull this thing up. Here we go. Our S1 is 36.58, which is pretty big number down. That would be a serious retest of the 3502 levels. R1 4020, R2 4224. That puts us right back retesting the highs that we made in February. So I think we stay somewhat in this range this quarter. We've got just the month of March to finish this off. But you see the algos are suggesting they're declining. And we're still, while they're declining, the upward slope, what it's doing is losing its upward momentum. It's not rolling over to a negative, and it looks like we probably are going to set up something. I'm going to expand this, and I'm going to draw in what I believe is probably the type of formation that we're going to get here. This should take me just a minute. So this is probably what we're going to get is some sort of pattern that sets up like this, where we get some kind of consolidation. From an index standpoint, we really don't go up or down. Let me just draw in another line here, see if we can. So market grid should start to come in here. It's going to start to come in like this. So we should get trapped in this area. Now remember, this is a quarterly chart, so we're talking just looking at where I drew in lines, we're talking 24, 25. So we could see a massive consolidation in this market without seeing anything that looks like an all-time new high in this pattern. The thing that's positive here, let me clean this up just a little bit, is that the angle of attack of these moving averages are still up, and this is still a trend. So that's why I'm targeting this pattern here from the standpoint of trading within these moving averages. And like I said, the market grid is going to collapse, and this takes, we're just talking that for 2 more bars, we're talking 6 months here. So this is like worse than watching paint dry. This is a very, very big picture of things. And so this tells you there's a whole lot of consolidation that has to go by. This entire area here we could see a massive consolidation. So what does that mean? Let's talk just a little bit about what this means. This means that you're going to have to be a stock picker extraordinaire. You're not going to be the indexes. There's just going to be trading markets, and we should have really clean points to buy and sell the indexes. But how are you going to make money in this market? Not by trading indexes, that's for sure. I mean, not from a standpoint of a stock investor and standpoint of like our institutional clients, everything that we're looking at, we've got to figure out what set of stocks, what sectors, where's the money going to be. And I continue to promote that the secondary stocks like mid cap, small cap, stocks that are actually possible beneficiaries of onshoring, all those kind of things are where we really have to focus on. So looking at, there's no to the moon shots. We're not in 2020 anymore. There's none of this big V that we have here. Let me get an arrow. We'll make it red. Make it fat so you can see it. There's no moonshots like this. Not going to happen. Okay, you're really looking at this market's going to be a consolidation. This looks like no big deal, but this is potentially a year and a half of action, and there's going to be plenty of resistance, especially on this market grid. It's going to be really interesting to watch this unfold. Of course, we get the end of March, we'll have a new bar come in, so we'll see if we start to see this collapse that I'm talking about in the market grid on the quarterly. So when we get to the end of the quarter, all of this stuff will make a lot more sense. But this is, I would say, remember this date, 3/1/23. If you come back here 2 years and watch this video again, we're probably going to be somewhere in this range, whether we go a little higher, a little lower, but we're going to stay within the context of these angle of attack. These things don't move very quickly because it's 3 months at a time for one bar. And if you go back, if you think about what I was talking about last January, we got an outside reversal. You can go back and watch probably the first week of February after we finished a really terrible January. We get an outside reversal on the monthly. I said if we get a close on the quarterly, a lower close on the quarterly, that will lead us at least to 1 to 2 more quarters negative. That's exactly what happened last year. We don't have any definitive patterns here from the standpoint of big reversals, things that happen like we had last year. So there's going to be a different configuration. Like I said, it looks like to me everything is just going to fall in line here, and this is going to be the configuration. So we're going to have to hang out like 24, 25 a year, year and a half from now to figure out if Bob was right about this. But this looks like the pattern. If my scenario of how do we play this is even more important in my opinion, is how we play this with individual stocks. You're going to have to play more individual stocks to actually participate in this particular sequence and possibly going on for a year and a half or more. Maybe something magical happens. Maybe there's ceasefire, end of the war. Maybe there's a whole lot of things that could generate more excitement than what I'm talking about here. But it looks to me like we're locked into this pattern, this very long-term pattern. And if you go back, I think to last year, whenever I cover this, would be kind of nice that if we could like pull out these things, I do these long-term analysis just to bring them out. So, so anyway, that's the perspective I want you to have. This is going to carry through all the markets. The only thing that's different here is that I think the mid cap, like if you look at ETF, MDY or IJR, those are two small cap, mid cap indexes. Those will probably be bigger winners than the S&P going forward. I think they'll end up being the leaders, and I'm talking about going forward, coming into 6-9 months plus in this pattern. So this beginning of each month, I like to go through these type of configurations just to get a handle on what to expect. And over the weeks to come here, we'll be talking about sectors, maybe industry groups, things that might be in play that we can definitely be focusing on places to make money. And I think that's, if you look forward in the world, there's a lot of things that are trying to be reconstructed. And it's not just when I was talking about the sea change in the economy, but I mean, you're looking at, they're trying to turn fossil fuel cars into electric cars, which is actually probably an impossible task to do. Not only do you have to get the materials, you have to have the manufacturing to make the batteries, to make the cars, and then you have to have the electricity to charge them. And you're not going to get those from wind turbines and solar panels. There have to be some new technology, which would most likely, if we go down 15, 20 years, there probably will be some. We're not, things will change. But I'm saying that is a big effort. It's a multi-trillion-dollar investment, even just move cars that way. And there's so much more than transportation. I think everything gets reworked. Who knows? Maybe there's some technology where you can just go beam me up, Scotty, and you don't even have to get on an airplane anymore. So I saw some interesting article about potential of being able to move matter just like on Star Trek days, right? Anyway, little joke here. All right, so here's what the plan is for the rest of this stream. Is I'm going to do a NASDAQ. We'll touch on some weekly, monthly stuff. I'll go through that, and then Russell, and I'm just going to try to get through the rest of the show. I can tell you I'm really dedicated to this channel, folks, because outside of the door of my office right now, there's snowflakes coming down the size of my truck, okay? It is snowing, and we probably have 4 inches, and it's piling on. So I made the haul over here to be here for you guys tonight. So make sure you hit the like button. At least my efforts to get here deserve a like tonight. So let's go ahead and go through the rest of the show. I'll try to be very efficient and just getting bam, bam, bam through all the different segments. So let's go ahead and get into the NASDAQ here. Yeah, somebody says, where am I? I'm in Arizona, believe it or not. I'm in mountains in Arizona. Yeah, it does that here. So much for global warming. Anyway, folks, all right, so let's get into NASDAQ and just take a look here. It's interesting. This is the weekly. There are some downside objectives here. STX on NASDAQ right now for the week is, hang on one second. It is, STX is 11,464. We're looking at that fib target 11,361. So right toward the STX for the week. We're currently trading at the moment at 11,902, low 11,008. And we look at from the grid standpoint, 11,871 is S1. So we're printed S1. We're also right on the 10-period moving average, which is actually positive by 0.70. So it is very possible that we print a bottom somewhere right in here. So watch for this reversal. This is a weekly chart. I'm going to look at the daily here in a minute. But the weekly looks like we stay, this upward slope stays right in for another week or two at least before we start to see it trail off. So I think we probably next week, if these numbers hold here, we'll see the market grid turn up on a weekly, and we'll get a little slight bias as we come into that second week of March, and it'll be the first full week of March from that standpoint. So let's take a look at the daily here. Daily's trading below this 40-period moving average. We're one day, maybe two from the 10-period crossing the 40, which will be a bullish cross. The algos are suggesting slight potential turn up from that standpoint. They're negative 0.67, so big time downtrend on here. The 40 is ppm 3 is actually slightly positive. So we have some effort here to stay within the grid. If you look here on the daily, just looking at the market grid here on the daily, you can see that the S3 is 11,818, 11,773 is STX, and we've been 11,854. So basically have printed that S3 number already. So like I said, my expectation would be based on, let's flip this over to, let's go to hourly and just see what the algos are saying here. We usually don't look at this, but the algos are all turning up really strong here. So look for a rally to test the 11,960, and then if we get above that, you should come back in toward these averages are coming down slightly, but somewhere around back to 11,900 to 12,000 should be in play here, just looking at that overall picture. Okay, so next we'll take a look at, I'm going to stick with this hourly. There's kind of an interesting look at NASDAQ. I usually don't cover that like that, but we are seeing all of the algos turning up on the hourly, suggesting at least a test. When you see, if those of you that have the indicators, if you see penetration of the first derivative, that suggests that you will test that value. It looks like within 2 hours, the second derivative will get is being forecasted to be penetrated. So that means that we should test that value of that moving average, which is 1897, but it is coming down right now about $2 per hour. So that'll be probably 95, 93-ish, something like that. We should test that level and maybe get above it. Last trade here is 91. So these aren't big numbers, but this is the way to view these as you look at them. So let's go ahead and take, let's just go to weekly here. I showed you guys, I won't go into a rant like I did last night looking at this stuff, but all of the weekly algos here, we're still up 0.63 on ppm 1. That 1891, we should be able to hold around this value here. I started to put the title for the video tonight, that market to hold support levels, and I think that's what we're looking at here, is that these levels were likely to hold if they dip through. Like I said earlier, it's not going to take much to trigger these indexes into a bit of a short covering rally. It's pretty tough to find someone that owns the market right now. So here we go. I talked about the 10-year trying to stall out here. We still have some upward momentum. We did print up to 4.006, and we're probably setting up a right shoulder here. It doesn't look like we're going to develop into another trend and take out 430. Guess anything's possible. This is the weekly. It looks to me that we're going to stay positive because the PPM1 is at a 1.27, and that number will tell us that 10 period moving average will hold. That's 3.70. And last night I covered the 10-year futures. So look at this. It still looks like there's potential for, on the futures, maybe are giving us a better view here. There still looks like some potential for the futures trade down to 106 level. But it looks from a market grid, this is a weekly futures. We're looking at the market grid here for looking maybe S2 110, S3 109.17, something like that will be is possible here. But it does, there's still some, this is a weekly, still some downside there. I'm just going to flip this futures over into a daily chart. And I think this is sort of interesting because we're starting to break the, I was just telling you about when this indicator breaks the second derivative, which it's doing right now, says that we should challenge on a short-term level, we should challenge the 111.08. We get above that, we should trade up toward this pivot number, and we have three Fibonacci targets, 112.15, 113.06, and then you also have the 21 period moving average sitting there at 112.14. So there's definitely, looks like we can trade up into that level, which would mean yields would decline just a little bit during that period of time. All right, so taking a look at crude, been talking up crude, literally, pun intended, that crude, it looks like it's going to continue to move a little bit higher. We're about to do the same. It's interesting, and whenever I cover the 10-year and then we look at crude, they have similar type configurations, meaning they're right where things are starting to break out at the same time. So, and like I said last night, I won't cover the Dow tonight. Maybe I'll finish the week covering the Dow, but I think a lot of it has to do with maybe market movements in the Dow. The interest rates are affecting the Dow, which is affecting the crude oil and probably gold as well, as we covered that next. But we're sitting here right on resistance 77.59. We get above that, all of a sudden we're going to be looking at the market grid. You're going to be looking at the potential for 78.15, 78.66. I don't think we get much above that, but we probably start to trend upward. Now this is the daily. Look at the weekly chart here. You can see we're sitting here right on resistance, but I think we get up into 78, 79, 78.50, 79 handle. There's going to be resistance, but I really think this market is just locked in a sideways range here. I don't see it being positive or negative from that standpoint. The algos are pretty solid. They're trying to look like they could turn south again, but really what we're seeing here is just a complete sideways configuration. So we'll take a look at gold. Gold continues to be rebounding up right off of this 21 period moving average that I talked about. This is a weekly chart. Still looks like we've got plenty of resistance. We traded up the RTX number 1861. I was talking these numbers the other night. We got up to 52. So we're coming right into 1851 was R3. So I was talking about coming back into the range. We probably will see if we can hold these prices together. And by that, I mean holding together would be if we close somewhere around 1840 plus on Friday. I know we got a couple days to go yet, but if we get that close, we'll probably see market grid turn up, maybe a little mini test of this 1870, 1880 range will be tested, and I'll be able to come into that just a little bit better. Looks like you folks, I don't know if we've had any of the bots hanging out, but I love my, what somebody called, I love my Smurfs. So thank you, all you folks that I made moderators. It's awesome. So thank you for, I'm not worrying about that chat line anymore. But anyway, so let's go ahead and we'll finish at Bitcoin. Bitcoin, this is the weekly, just kind of continues to waffle into the market grid range that I've been talking about. Right now, we're looking at the range at the moment. We're looking at low 23 even, 23,990, and we're looking at S1 22,904, so that should be the bottom end, and R1 24,219, 24,955. So those are the upper end. So we're really just trading in a very tight range here. It does look like, and I've been talking about this, that we're going to challenge this 10-period moving average, which is 21,700. If we get through that, then we head for the 21 and 40, 19,700, well, 20,650 round number, down to the potential of 19,728. Take a quick look at the dailies. That's interesting when you go from intermediate trim, looking at the short term. We have some upward fib targets all the way up at 25. What are we looking at here? 26,664. The algos are really just flat, though. I think we stay in this range. We're going to stay, most likely stay around these 22,320. The numbers I just told you on the weeklies are the numbers really to pay attention to, and we're going to waffle within those. There's a fib target, 22,368, 370. That's probably the extreme on the downside there. Okay, folks, that's going to do it. I've got my winter's gear on, getting ready to go tackle the snow out there, see what happens. Appreciate everybody coming to the channel. As always, make sure you subscribe, hit the like button, all those good things. I don't know how we're going to break the YouTube. Yeah, the YouTube algos and shadow banning this channel, but just keep going, keep liking, make sure you respond. The best responses are on the replay. So if you do watch it, make a comment there. That always helps as well, so I understand. But it's an interesting world we live in. Yeah, just a quick comment. I always cover Bitcoin. A lot of folks, I think it's the only coin out there that actually has any kind of merit. I actually don't trade it or own it. I have traded it many years ago, but I don't anymore. But I do think it has some relevance. And of all of the cryptos, I won't make a comment about that. I would not be very impressed, but at least Bitcoin, maybe Ether, has some merit, and that's why I cover it every night. So I started covering Bitcoin by popular request. So I think that's I'll continue to do that. Let me look and see if there's any comments here. You're probably right, FF. That was funny. Mason and I were having that conversation the other day. So, yeah. Yeah, so it's a good thing. Somebody said, good thing uh, from my Midwest driving in the snow. Yes, I have plenty of experience. I also lived in Colorado. So I know that as well, especially the big mountain stuff. I lived up like 8,000 feet in Colorado, so we had plenty of snow there. But anyway, yeah, so I know how to get around it. The biggest pain is just getting the windows and all the junk cleared off. So anyway, thanks everyone. It's hard to believe we're coming into Thursday already, and tomorrow night will be the final broadcast for the week. But yeah, we're working on a project I think everybody's going to love. I just can't wait. We hired some people today actually to help us complete this thing. It's probably a week or so away, but I'm anxious to show you what we're doing. Very excited. So make sure I'm still working on my article for part 2 of the PPM. It's become very complicated, but I think it will be worthy of the wait. I thought I'd have it done last weekend, and I keep getting, it's like pushing on a rope at the moment. But I'm hoping that I will have this done very soon. Anyway, folks, thanks for watching. You can get me on Twitter at PortfolioXpert. There's no E in the expert. And also on Substack, kendallreport.substack.com. Sign up there. I've actually got some other articles that we're working on that we're going to be posting. So anyway, thanks for everyone. We'll see you tomorrow night, same time, same station. See you then.